Welcome to a new deep dive. We're here to cut through the noise, get you well informed, and do it quickly. You've sent us a really interesting stack of sources this time, all focused on a major player in global IT services. Wipro Limited, specifically, we're digging into their Q1 2026 results. That's the quarter that ended back on June 30, 2025. Okay, so let's unpack this. Our mission today is really to understand how Wipro is handling, well, what looks like a pretty turbulent global environment and what's their financial health actually like under the surface? And this big bet they're making on artificial intelligence AI, not just for themselves, but for their clients too. It's definitely a story about navigating uncertainty, making some strategic shifts, and honestly, some really quite interesting numbers.
Yeah, and what's fascinating right off the bat is the challenge Wipro faced this quarter. I mean, you had significant macro uncertainty, pretty muted demand overall across the board. Clients were really laser focused on cutting costs, consolidating vendors, the usual suspects in tough times. But, and this is the interesting part, at the same time, they were speeding up spending on AI, on data, on modernization projects. So it creates this really compelling, almost paradoxical dynamic, doesn't it?
Absolutely a paradox. And the numbers for the quarter, they definitely show that dynamic playing out. Let's maybe start with the financial highlights.
Good idea.
Okay, so IT services revenue in dollar terms, it came in $2,587.4 million for Q1 26. Now, to get the real picture, if we look at constant currency and strip out the exchange rate noise, that's actually a sequential dip of 2.0%. And year on year, down 2.3%. It was inside their guidance range, though, which I think in this environment, that says something in itself.
It does. But what's really, really noteworthy, despite that revenue dip, is the IT services operating margin. It actually went up, expanded to 17.3%.
Yeah.
That's a jump of 80 basis points year on year, nearly a full percentage point improvement in profitability.
Wow, okay.
Yeah, and in a market where revenue is shrinking, that tells you it's not just simple cost cutting. It signals Wipro's internal operations, their machinery, it's getting fundamentally more efficient. It really speaks volumes about their operational discipline. Improving profit when the top line is pressured, that's resilience. Many companies struggle with that.
And get this, it wasn't just the margin. Their net income actually grew 10.9% year on year for the quarter, and earnings per share up 10.8%. So wait, revenue down, but net income up almost 11%. And that free cash flow figure you mentioned before we started, 115% of net income. That sounds almost well, counterintuitive right now. What's the real story there? How are they managing that?
Yeah, that 115% free cash flow, it's pretty remarkable. It basically means for every dollar of profit they report, they're generating more than $1 in actual cash, which is just a fantastic sign of financial health, really efficient working capital management. Their aim is clearly, turn profit into cash in the bank, ASAP.
Okay.
And this strong cash position, they've got $6.4 billion in gross cash. It gives them huge strategic flexibility.
Yeah.
It lets them fund that capital allocation policy, giving back at least 70% of net income over 3 years while still having plenty left for growth, maybe even some strategic M&A.
Right. So the financial discipline is there, protecting margins even with revenue headwinds. But how does that look market by market? Let's zoom into the regions. America's 1, that's North America, mostly grew 5.8% year on year in constant currency. America's 2 grew 2.7%. That's decent momentum in really key markets.
It definitely is. America's 1, especially, has been pretty consistently strong. Sectors like healthcare, communications, they're driving that. Now, consumer was a bit softer this quarter, apparently due to some tariffs, but the overall bookings in retail and CPG were strong, so future potential looks okay there.
Oh, okay.
Europe, though, that's a different story. Still facing significant headwinds, down 11.6% year on year, constant currency. Clients there seem really intensely focused on just staying competitive, which often translates to, well, an even sharper focus on cost optimization.
Makes sense. And then looking at the industry sectors, they mentioned strong, steady demand from BFSI banking, financial services, insurance, especially as those clients modernize their IT, and importantly, with an AI-led focus. Healthcare also did well, right? Up 3.5% year on year, constant currency. Clients investing there in modernization, digital transformation. So even when things are tight, clients are clearly still prioritizing certain kinds of spending.
Exactly. And that makes me wonder, even with this cautious macro picture, clients are prioritizing transformation. Like in BFSI, you said it, demand is driven by this sharp focus on AI for efficiency, for transformation. It shows even heavily regulated industries are really aggressively going after AI for fundamental changes, not just small tweaks.
Right.
On the flip side, consumer, EMR sectors, they're being more cautious, hit by things like tariffs, as we mentioned. But here's the interesting twist. Even in those softer areas, the routine outsourcing renewals, they still create chances for Wipro to grab market share, specifically through vendor consolidation.
Ah,
Yeah, it sounds like companies are trying to tidy up, clear out the pantry, maybe consolidate all their buying with just one or two trusted suppliers to save cash instead of dealing with a dozen different ones.
that's a great analogy. And it leads us straight into maybe the most game-changing part of their quarter. These absolutely huge strategic deals they signed. Wipro really, well, they crushed it on new bookings. Raked in a massive $5 billion in total contract value. That's up 51% year on year. 51%.
Wow. Yeah, and their large deal bookings, the big ones, hit $2.7 billion. That's up an incredible 131% year on year. Included 16 large deals. And get this, 2 of them were classified as mega deals. I mean, that's just phenomenal in this climate.
It really is. And what's fascinating is that several of these big wins were clearly driven by exactly that trend you just described, vendor consolidation.
Right.
Wipro seems to be building some serious momentum there. And these deals, they seem like a good mix, extending work they already do, but also winning completely new business. It showcases their capabilities, their deep industry knowledge, and crucially, the progress they've made embedding AI into their offerings.
They give some really interesting examples of those mega deals, too. One was with a global banking leader. Wipro picked as a strategic partner to transform tech across multiple business lines, and specifically embedding AI across the entire software development lifecycle.
Okay, so AI right at the core there. Exactly. Another was with a big global semiconductor company. A multi-year deal to modernize their whole product lifecycle, focusing on using AI and automation to speed up development.
Mm-hmm.
And a third mega deal with a major North American bank, extending a partnership they've had for a decade, again, to transform technology using Wipro's AI-powered delivery framework. The AI theme is just inescapable.
It really is. And these examples, they just underline this clear trend. AI isn't some niche experiment anymore. It's becoming fundamental to how businesses operate at scale. It's like a core operational tool now. Wipro clearly sees AI as this force reshaping industries,
Yeah.
amplifying what humans can do. They're aiming for an AI-first, AI everywhere kind of enterprise.
AI.
Everywhere.
Yeah, their AI capabilities are apparently deeply woven into their solutions, both the industry-specific ones and the cross-industry platforms. Things like hyper-personalized wealth management or predictive insights for industrial settings. They mentioned they've already rolled out over 200 AI-powered agents, doing things like enabling smarter lending or intelligent claims processing. It's becoming pervasive. But hang on, achieving this AI-first, AI everywhere thing, that must rely heavily on having the right people, the right talent. And we know the market's paying a huge premium for AI experts right now. They're scarce. Wipro seems okay with this cost pressure, though. What's their strategy for talent in this high-demand environment?
It seems like a pretty smart long-term play, actually. They're not just, throwing money at hiring external experts, though I'm sure there's some of that. A big piece is investing significantly in in-house capability building, upskilling their own massive workforce to meet these new AI demands.
Building from within.
Exactly. And that target they mentioned, bringing in about 10,000 fresh graduates this fiscal year. That's not just filling seats. It's a pretty bold bet on building a future-ready workforce from the ground up, specifically designed to scale up their AI ambitions long-term.
Okay, that makes sense.
Sure, they acknowledge there are pockets where attrition is higher for those really in-demand skills, but overall, attrition is apparently stable in a range they can manage. And their focus on developing future leaders internally, moving people around laterally, that also points to a sustainable long-term talent plan.
Right. Okay, so last piece, their outlook. What are they forecasting for the next quarter, Q2? They're guiding for sequential growth between -1% and +1% in constant currency. So still cautious, given the macro picture, but they sound confident because of that strong order book, the healthy pipeline, and their focus on these AI-powered, consulting-led deals we've been talking about.
Yeah, that cautious outlook is definitely balanced by some real tailwinds, those large deal wins we discussed.
Right.
Especially that massive Phoenix deal from last quarter, which only really starts ramping up in Q3. That's expected to fully contribute over the next, say, 6 to 8 quarters. That's what gives them the confidence to say the second half of this fiscal year should look far more positive.
Right, the pipeline effect.
Exactly. This sustained, strong deal momentum, even while overall demand is weak, it just highlights that strategic shift towards these large-scale cost optimization projects that are increasingly being won because of AI and modernization capabilities. It's not just about being bigger anymore. It's about being smarter.
So let's bring it all together. What does this really mean for you, the listener? We've basically seen a company navigating a pretty tough macro environment. They're leveraging these powerful trends, cost optimization, vendor consolidation to land these absolutely huge new deals. And all the while, they're embedding AI right at the core of their strategy, both for how they operate internally and what they offer clients.
Yeah, and if we step back for just a second, Wipro's quarter, I think, really highlights a critical shift happening more broadly. AI isn't just some experimental tech anymore. It's rapidly becoming an essential operational tool, especially for large enterprises. Which makes me wonder, and maybe raises an important question for you to think about. If even these massive cost-cutting focused deals are now being driven by AI-powered solutions, what does that imply for the future of business operations across, well, basically all industries?
Yeah.
How is this intense focus on embedding AI for productivity, for transformation, how is that going to reshape how organizations operate, how they innovate? Not just for Wipro, but potentially for every company globally in the years ahead. Something to chew on.